Good afternoon, everybody. Welcome to our Short Verticals webcast. I'm Connie Hill. We meet each week at this time and discuss short verticals. Now, today we're going to focus on something we haven't focused on quite as much, and that is considering a little bit more the exit conditions when we want to get out of a trade. We're only going to do a short vertical in this class, so it's going to have some specific rules to that strategy. Now, I am joined in the chat by James Boyd. I'm glad James is here. He knows short options inside and outside. Probably Jax knows them too by now. Anyway, when you have questions, go ahead, chat those in. I'll keep my eye on the chat for your questions, and James will pick up anything maybe I can't quite get to. All right, so glad that you're here. I hope you're following us on X. I'm Connie Hill CS. James is James Boyd CS. We'll post educational content throughout the day, things that we think you might find interesting, right? We're going to post about it. It's free and easy to follow us, so feel free to do so. We'd love to see you. Let's go through our disclosures and get into our agenda today. Options carry a high level of risk and are not suitable for all investors. What we talk about is today is for education and information only. Don't consider it a recommendation. We'll be using the Paper Money software application. That's what you download to your computer. It's the most robust version of Thinkorswim. Investing involves risk, including the risk of principal. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. In the monies, typically have a higher probability of being assigned. However, you have to know theoretically it could happen at any time, and paper money does not simulate that functionality. So we like to give you a warning there. Past performance of any security or strategy does not guarantee future results or success. Well, I want to say hello to just a few of you that are here live. You're friendly, you're always interacting with each other, which I love to see that in our class. We've got Paul, Life in the Fast Lane, Richard, Judge, Jim, happy to see you here. All right. Upcoming workshops. I kind of keep pumping these at the beginning of every class, all right? If you're near Chicago, Washington, D.C., Dallas, or just want to go there, take advantage of these events. They're free to you as a Schwab client, and we treat you pretty nice. James will probably agree. Yeah, we're pretty nice to you there. We feed you not only with information and education, but we keep your bellies satisfied as well. Typically, we want to discuss some aspect of short verticals in this class. Now, this is more an intermediate level class, so I'm going to assume you know some of the basics of short verticals. If you don't, you might want to spend a little bit of time in a class called Getting Started with Options. Cameron May teaches that Tuesdays, I believe, at 12 Eastern. And he'll go through every one of those strategies, not every one, but several of the main strategies that you might want to consider in starting out. And so if it's something you're not quite familiar with yet, that's okay. Stick around here today. You'll pick up some basics, but I want you to know we're not catering to kind of a beginning level at this point. We're always going to do some example trades. I've got several lined up, and I want to talk a little bit about technique in trade management. Last week, I showed you a process where if you wanted to just automate everything, automate if you made a gain, automate if you made a loss, kind of showed you how to do that. I'm curious to know if any of you practiced or kind of played around with that in paper money at all. When we take a look at some of our stocks that we're reviewing real quickly, I'll show you one that hit one of those targets from that kind of profit target or exit target on the downside. All right. Let's see here. I told you I wanted to focus a little bit on exits, and we did so last week with kind of automating the exits, right? I showed you how you could create that custom template, but just kind of in some generalities, okay? Typically 4 to 10 days before the option expires, if we're not out of the trade by then, we really need to make a plan to quickly be out, okay? We really don't want to be sitting in these trades till the very last minute, okay? There's no need for that. A lot of people like to get out at a percentage of the max gain, which is what we frequently do in this class, right? When we put our order in, we'll say, hey, if we get a chunk, that percentage, we're out of here. You can exit at predetermined max loss areas as well, and that's where we kind of automated that last week. If that is something that interests you, I'll put a link to that class in the comments section when we go through the show notes. I'll put a link there. But you can also just go back to the playlist to last week's class so that you can see that. You might want to determine, hey, if the stock does X, if it violates what's going on, and it's like, man, things have changed now. It's no longer a leopard with these spots. You've got a bear or something, then you want to take action if it makes a technical violation, and just kind of being aware what that might be. It says, look for signs of a new downtrend, which could come in the form of, say, a lower low, could come in the form of a lower high. So if it's starting to develop that and is beyond your strike price, that's when you're like, okay, not going to hang around here much longer. Okay, so we do want to focus on that. Let's take a quick look. We're going to head over here to our Thinkorswim. Just kind of see what the markets have been doing. And I have two studies that we might look at here a little bit today. One's the RSI, giving us an idea of momentum. ADX, average directional index, gives us an idea of the strength of the trend. So a lot of times we will focus on just the moving averages and just candles, but I just want to kind of bring in a little bit more here today. If you want to add a little bit more to your charts to give you a feel for what's going on with the stock. So RSI gives us an idea. Where is that momentum? Is it bullish? Is it bearish? Is it growing? Is it diminishing? It has a 70 at the top, a 30 at the bottom. 70 is that oversold there or overbought area. Below 30 is the oversold area. And so right now, say on the SPX, I'm going to put my mouse there. It looks like it's about 68 and some change. So it's getting kind of close back to going over that 70 line. It'll be interesting to see because we had a peak here, and then the index went a tiny bit higher here. But the peak on the RSI didn't go above it. It didn't go past the previous peak, which is a little interesting. Is there a divergence starting to develop? We'll see. We'll have to watch it. ADX, a value of 25 or higher, gives us an idea that trend, whether it's bullish, whether it's bearish, is strong. Right now, that's saying it's a 29. So we say, okay, great. It's strong. It's not, if it were 30, 35, 40, we'd say very strong. Okay, but yeah, at least it's in an area we would call strong. All right. S&P right now having an up day. I was going to pull up the NASDAQ here real quick. Same thing here. Guess what? Another all-time high. And so when we're looking at those kind of conditions and we see volatility still in a lower range, we're like, okay, we're going to put on our bullish trade hat instead of our bearish trade hat. We could go neutral to bullish. And those are the opportunities we're going to look for. Now, we've talked about a process that we've been going through. And I'm going to collapse our watch list here for a moment and open up our scratch pad. And this process has been a number of steps. Okay, so we just kind of did step number one, which is your market posture. So I'm just going to review these over here in the scratch pad area. So deciding, are you bullish or bearish? How bullish or bearish do you think you are? What we call our market posture. We're done. We're bullish. Okay. Number two, we want to take a look at the stocks on our watch list. And we have a fixed watch list that we go and update every month, right? It's not time to update it this month. Last time we updated it was on June 26th. So we're still using that watch list. And probably next Thursday when we have our class, we'll either that week or the week following, we'll go ahead and update the watch list. Okay. So then you're like, okay, let me go see. I'm willing to take trades on any of these stocks. They might be bullish. They might be bearish. Right now, we're really focusing on the bullish side. So I've sorted it by percent change so that we're just kind of looking at those on the list that are up today. Some might be up a lot, and some might be up just a little bit. Okay, but that we already know. Okay, we're going to look for a setup. We're going to look for a hold. We're going to look for a possible bounce off a support or a moving average, or a breakout above resistance, or a breakout out of a price pattern. Okay, so on our little look here, I'm going to say setup is what we're looking for, which basically is entry conditions. Do we have some entry conditions? Are we almost there? If we're not quite there, what else do we want to see until we're like, okay, feel good about that signal? All right. So maybe I'll do this. Maybe I'll just I'm going to get rid of this gadget. Clicked on the wrong line. Here we go. Delete that gadget. And then we can have our scratch pad open. And I want to give us a little bit of space here so we can see the watch list, but not have the watch list totally take over, which it just did totally take over. Okay, I'll have to go back and forth here a little bit. All right. On our watch list, some stocks that I took a look at this morning. And really, if you are using a watch list of your own, you've determined the criteria, you've said, yeah, these are liquid stocks, whether they come from S&P 100, NASDAQ 100, whatever your source is, okay? Then just come down and look for entry signals, right? You start at Pepsi. Nice breakout today with their earnings. That actually ruined a trade in one of our other classes. We'll talk about that next week, or actually on Friday, right? And you're just kind of coming down and seeing what is available. And this process hopefully won't take you very long before you start identifying some stocks that have some entry signals, okay? Let's see here. Mongo database. Okay, we'll consult the RSI, we'll consult the ADX just to tell us, but we're not going to have any rules based on it. Okay, we're really going to use looking for the cold and things of that nature. But the ADX is at 24.75, so it's almost to 25, letting us know the strength of the trend is going up a little bit. And you see it's kind of been a little bit sideways here. So if it really breaks above here, then I would expect that ADX line to be going higher. Our RSI is pointed upward, so it's saying bullish. It's at about 61, so it's above 50, showing some strength as far as the momentum. Now, in short put verticals, we're okay with a sideways trend or a bullish trend, right? It can be either. On Mongo, I'm going to say it's a little bit of both, okay? Because it's kind of been down in this sideways area. And I was looking at maybe what the high price was here, which was 218.42 in the stock right now. It's just kind of getting to that area. And it looks like it's bouncing off the 10 and the 30 together here. So we're going to use that as its entry point. All right. Going to go to the trade tab. In our class, we'll allow ourselves to risk $1,500 a trade. We don't have to risk that much, but we can risk up to that amount. So we typically are going to do that. And so on Mongo, we're going to look here at the August 15 options. If you want to pick through the weeklies and see if there's something a little bit more liquid, there weren't really with Mongo database. So as we come down here, we're going to look at doing this 210 and 200 strike price here. So we're going to say sell vertical. And what's our next step is to say, okay, we've identified something. Let's make sure it's going to give us a good enough return, right? So I'm going to just put here the return, making sure it's at an acceptable level that you're comfortable with, all right? Right now, if we sold that to 10, probability of expiring and out of the money is about 60%. So generally, we do like it to be 60% or higher. All right, we've got about 29 days for these options to be in play. All right, let's go to our calculator here. We take our 10 minus 305. That should give us 695. So that's going to be our max theoretical loss. We are willing to risk that to make a gain of 305 because the probabilities are a little bit higher on it, okay? I do like the open interest that we're seeing here as well. Lots of contracts. If you're somebody that likes to trade, 20 contracts at a time, there's lots of open interest there. All right. So let's get our return here. Our 305 divided by 695. It's going to give us about a 43% return. Okay. So many people might like that. High 30s, low 40s. Some people do 20s as well, just depending on how much time is left. So, this being about 43%, it's like, okay, let's move forward with this. Knowing that we can risk a $6.95 a trade is going to allow us to do 2 contracts. Okay, so let's get our contracts on there. And then we're just going to put in our exit. Now, we're not 4 to 10 days out yet, right? So that exit rule doesn't really apply. But I'm going to put in here exit rules you want to follow. Okay, when are we going to get out of this trade? If it breaks down, let's see, we're going to sell the 210. Let's see where 210 is. I'm going to put my mouse in that area. So it is a little higher than where it's been going sideways here. So it's going to be about right, pretty close to where my mouse is right now, around 210. So that has about $8 of leeway. All right, so as long as we have the stock staying above that point, we're willing to let it just float along and time decay and work to our benefit on it. Okay, I don't see any earnings out here. That's another thing in our process. We want to check for earnings. Some will trade over earnings, some of you might not, right? Some of you are like, no, I don't feel comfortable there. That's fine. There's others of you that are like, yeah, I feel good holding over this particular earnings. So just be aware. All right, let's do our first trigger sequential. Let's create an opposite order. And let's go and put in an amount that we're comfortable with. If we get a chunk of our 305, we get most of the watermelon off the rind, but not every little scrap, right? We get a chunk of that, we're going to be content. So let's go clear that out. Let's go 305, and let's use today. It's a 305 is a decent return, right? We don't have to be greedy with it. What if we said 70%? If we get 70%, we're out. Okay, so we'll multiply this by 0.3. 0.3, get my, oh, okay, let me do it again. 305 times, my finger's having a problem here. Let's try it one more time. 3.05 times 0.3. All right, 91 cents. We're going to say we're willing to go back and buy it back at 91 cents to keep most of the watermelon on the rind, but not all of it, right? If we were going to do all of it, we would not be doing that, right? But we're willing to say, hey, if it gets down there, yeah, let's go buy it back, lock in the gain, move on to a new trade. All right, so we've got our exit order in there. We're going to send it off. All right, we're following the same process pretty much every single trade. And I hope you're getting comfortable with that process and knowing what it is. So when you're looking at your watch list, you already know what your posture is, you know what you're looking for an entry signal, you know how to run the numbers to make sure you're getting the return you're comfortable with. Okay, and if you're not comfortable with it, move on or see if you find some other strikes that seem to look good. Okay, we're going to actually have some different choices in here. Let's take a look at one more. Interestingly enough, the ones that we're looking at today, a lot of them are in the information technology sector. All right, it's been the best performing sector right now over the last month. It's up the most. So not too surprising. RSI is tilted up. It's about, what does that say, 61? So it's in a strong area. It's above 50. ADX, now this is interesting because it looks like maybe the trend is weakening, but it had this huge pop. And so, yeah, it's reflecting the fact that it's pulled back here a little bit. But the ADX is still at 32. That's letting us know the trend is really pretty strong. That's quite a bit above 25. Okay, so we're like, all right, we've got our technical analysis. What kind of an entry would we be looking at here? To me, I'd say it looks like it's kind of at that 10-day moving average, which has been acting as support. And so we're getting it when it is low and at support. Some traders might like that as an entry. They might say, I'm not going to necessarily wait for it to give me a bounce. If it's down there at support and looking like strength is moving back in, then they're happy to get in right there. Okay, so let's go take a look at Datadog. And on Datadog, same thing here. We're just going to use the October 15s. They're the monthly options. We really do not need 70 strikes up here. I think we'll be okay if we just go with 30. And we have a couple of choices here. We've got usually a 30 to 40 delta is what a lot of traders like, right? We got a 40 delta, a 30, and a 22. Okay, so most likely here's going to be this 135. We're looking to do a 135, 130 short vertical. Bring that up. And I'm just going to kind of lock it there because I know the price is going to bounce around a little bit. But let's just run some numbers on this. Okay. What's the probability on this one expiring out of the money? Okay, good. It's starting at 65%. Okay. Probability of expiring out of the money. We love that. We like that number to get bigger and bigger as time marches on and as time decay impacts the spread. How about, what's our max loss going to be here? 5 minus 1.37, 363. Okay. Well, let's divide 137 by 3.63. That should give us our returns, about 37%. To check off the return, some of you probably, maybe lots of you, right? 37%. You're like, okay, if I can make at least 1% per day that we have until the options expire, that's what some people will use as a gauge, because they might even go a little bit shorter time frames using those weeklies, but that might be the gauge that, okay, I want at least 1% a day. This is easily doing that for us. Okay, we're going to move ahead with this guy. 363 is our max loss here. And so let's go 1,500 divided by 363. That says we can do 4 contracts here. And when I did my math on the first trade, I believe I may have just position sized it for $1,000. Okay. In my brain, I think I was thinking 1,000 instead of $1,500. So if you picked up on that, I just want you to know, yeah, I changed it. I decided we needed to go off our class account amount. Okay. Very good. Next up, what's our next step here? Tell the dog, tell your screen, what's the next step? Okay, we're going to look for an exit. We could look for an exit on weakness of the stock really breaking down below that support level that it's just sitting at, maybe forming a lower low, or when we get our profitability target. So we're going to change this to a first trigger sequential. We're going to put in an opposite order, and I hope you know what the calculation is here. 1.37 times, we could go 1.37, we could do 70%, 80%. Sometimes people go 60% on it. Let's do 75% on this one. Okay. So if we've got 75%, only 25% is left. And so we're going to multiply that by 0.25, and that says go buy it back at 34 cents. Great. We'll go buy it back. We're happy to do that. And let's make this good till canceled. And let's send this to our short verticals on the bullish side. I may have forgotten to do that on the first trade. All right. How many of you are finding yourself following this process just kind of regularly? That it's kind of becoming second nature to you. There may be some of you that have been trading this strategy for a long time, and there might be others of you that are just kind of newer to it, and you're trying to figure out that process. I want to share a couple of things with you between trades. Ted says, why do you look for 1% a day or any other amount if you're targeting to exit at 70% of the max gain or thereabouts? Yeah, that's a great question, Ted. The reason that some traders might look for 1% a day is just to know, is there enough in the trade to make it worthwhile? So suppose maybe our return was only 20%, 18%. We want to do that calculation first to make sure, is it even worth having an 18% return and then taking, getting out early with how much that might take away from the trade. If I have to give back, say, I keep 70%, but we say to get out at 30%. 30% of 18% isn't nearly quite as exciting. Okay. And so it's the idea of making sure the juice is worth a squeeze to begin with. And then if you want, go ahead and the second step of saying, all right, let's exit early to get out when we get a chunk of it. Okay. I hope that makes sense. Yeah, I hope that makes sense. Andy says, Ken drilled 1% a day into you. Great. Yeah, very good. I want to show you a couple things. One, I hope you're subscribers to our Trader Talks channel. If you are, it makes it so much easier for you to be able to find our content. Let's go over to it real quickly. Actually, it's going to be this tab. When you are on the Trader Talks, you see what's coming up, which when I pull this up, our class was coming up. And then you can also see, well, what's coming up next. Mike Fairborn's going to be next here with script studies on Thinkorswim. Those of you that want maybe a little bit more, maybe those of you that feel a little bit more experienced, feel like you're ready to add in some refinement to what you're doing with ThinkScripts. Mike does a great job teaching you about ThinkScripts in that class. Okay. We also have something that's called bite-sized content, and this is under the home look right here, where we're posting some short videos of different things. And so I've started a series about some things you can do in Thinkorswim. I call it quick tips on Thinkorswim. If you're trying to do, most recently I said create those custom tabs on or create those custom columns on the trade tab, how to create your own toolbar, things of that, where it's just, 3-minute, 4-minute video showing you how to do that. The other thing I want to show you is to answer a question that somebody asked and put on a survey this week. And I thought, I don't know if that person is in here because I don't know who the person is, but I thought there's probably a lot of other people that want to know that as well. So I want to take the time to answer that. And that was, is there a process I should follow? I'm new, I'm watching your videos. How should I go about this? So I want to take you, we're on the Learn, we're on Schwab Coaching. We're going to come down here and come in where the calendar is. Okay, so we're going to view the calendar. And in some of our beginning classes, right? Either getting started with Thinkorswim, or on Mondays, we have stock investing for beginners. I'm just going to go to that one. Scott's been teaching that at 11. Now, some of you might be going, well, I'm not beginning to I'm past that. Okay, I think that you'll still find this beneficial. Come into one of our beginnings, okay? And down here, do you see this? New Trader Starter Guide. I'm going to pop that up. I actually have it in this tab and kind of blew it up so we could see it. It's going to load a PDF file for you. Okay, and so it will start you out. Okay, if you're looking for getting started with the Thinkorswim platform, do this. If you're ready to do some things on it, great, and here's a deeper dive. Okay, make sure you've got your chart basics down. Kevin Horner teaches that class. Oh, no, actually, no, that's the class Scott teaches now, okay? Doing the investing basics. And so a couple little short videos here that might help you, but then just know, okay, yeah, let me go to those webcasts. Now, the question came in for somebody that's actually studying options, okay? So now we come down to the options piece, which is more fitting for probably those of you in this class. And so some basic videos here, but as I mentioned, I think earlier, Cameron's Getting Started with Options class, Mondays at 12 Eastern, would be the webcast that would support this course, Income Strategies, and then this little video on covered calls, that's going to be one of those basic strategies as well. And then once you get a little bit more comfortable with it, yeah, then you can get into doing some spreads. Okay, so wanted to throw that out there so that those of you that are like, yeah, I need some direction, I need some guidance, that's going to be a nice resource for you. Okay. All right. Let's head back. Oh, look at this. Cornelius, was that you that put that in there for showing us the Trader Talks page? Appreciate you reading my survey. Hey, man, if you guys fill out a survey for us, I read everything you send that you submit. James reads everything you submit, right? It's to let us know where you are so that we can help you and add maybe some of these answers in the course of our discussion. Okay. So I'm happy to show you that. All right, let's head back to our Thinkorswim. Another stock that comes from our little watch list. We just did Datadog. We are going to do Marvell. Now, here's Marvell. We've traded Marvell before. You can see we had a trade here where it looked like it was breaking out of the flag, and we got out a few days later because we put in an order to go buy back our order, go buy back the trade and lock in our percentage gains. Went there pretty quickly, which was nice. What's going on with it right now? Made a nice little high a couple weeks ago. It's pulled back. I'm going to kind of zoom in here. We see kind of this pullback going to, I'm going to say a slightly lower low, but not tremendously, kind of as a hammer type candle pattern there, which typically means, hey, this thing could reverse the momentum. The shift of momentum looks like it's likely. Today's kind of the confirmation of that candle. Some of you might say, okay, maybe that's true, but I kind of see it as a hold, close above the high of the low day. Now, market's not closed yet, right? But it certainly has moved beyond that. It has a significant body above the high of this candle here. So we're going to say, yeah, we're going to use the hold, the candle confirmation, either one of those signals. RSI is at 52 and headed up, so bullish momentum. Now, this is a little bit interesting. I'm going to back out so we can see this a little better. The ADX on this one, it's down at 20, and that's telling us maybe the trend is not so strong at this point, which would make sense because it kind of looked like it was possibly changing friends. Okay. So if somebody's like, I really only want to do something on 25 or higher, I get that. You totally could do that. Okay. I would say this one kind of falls into a little bit of the somewhat bullish because the moving averages are heading up, but it has flattened out a little bit. Okay, which is short put verticals fits that nicely. Okay, let's head over to the trade tab. Let's take a look here. On this one, I went back to the August 8 options. I mean, we have oodles of open interest here that made me think, well, I wonder if a little bit shorter time frame, if we can get some good open interest, and we can. So we're going to use the August 8 options here if these strikes still pan out. Okay, here's our delta column. We've got a 45, a 40, a 36, a 31, and a 27. Okay, so we've got a lot of strike prices we could consider. Now, isn't as liquid as those August 15s. So if you felt more comfortable with the August 15s, drop down to there for the open interest there. But I was looking at maybe cherry picking a little bit here with those that have some decent open interest. Initially here, let's see, I did the 36 delta, which is a 70. I did a 70.68. We got a really good return on that, which made me think, well, what if we sell the 68? Let's go 68.66. Let's see if this still financially meets what we're looking for here. Notice by selling this one, we've already, the one we're going to be short, the 68, we would have a 68% chance of it expiring out of the money. Do we like those kind of odds? Oh yeah, we love those kind of odds. All right. Let's change this, and I'm going to go ahead and lock it. Okay. We would want to gain 51 cents a contract, or 51 bucks, and it's only $2 wide. that could be really nice of you that are trading smaller accounts. And I read a comment here in the chat that somebody said, still working on building your smaller account. Yeah. When we're using strike prices that have $1 increments, it can help facilitate that. And even if you needed to do, say you're capped in one lot, right? And you're like, I can only do one contract. You could do 68, 67. There's enough open interest here that you could do, 191 contracts. You could do 4 or 5 of those if you needed to, okay? Not be taking up a big share of the open interest. But we're going to spread it out by 2. That makes it a little bit more efficient. Let's see if it gives us enough of a return though. Okay, so if we go 0.31 divided by $1.49, that's going to be our theoretical max loss. Let's see if I did that right. It should be a little higher than that. Let's do it one more time. 51 divided by 1.49. Okay, there we go. 34%. That's a number that looks realistic here. Okay, so just know, hey, if we did the 36, if you wanted a bigger return and a lower probability of success, because right now that's 59%, you wanted something bigger return, yeah, you could use some of those other strikes. For our purposes today, we're going to do that 68, 66. Okay, if we can risk $1,500 a trade, and if we can risk $149, we should be able to do 10 contracts here, right? 1,500 divided by 149. Yeah, we can do 10 contracts. Again, if you're comfortable having a smaller contract size, no problem. Okay, let's go ahead and put in our 10 units here. And we're going to do our first trigger sequential. We're going to create our opposite order. Here's our chunk that we're going to go for here. What if we were to go for, if we go 0.51 times, let's go back to 70% here, okay? That means 30% would be left. Let's go buy it back at 15 cents. And you don't have to sit here and watch it, right? You can be out golfing. You can be out walking your dog or shopping, going to lunch, whatever, right? You don't have to sit here and try to catch that when it meets that condition of your profit target that you're looking for. We're going to make it good till canceled. Going to send this on into our bull short verticals. All right, should get filled on that. Now, with our time that's remaining, I want to follow up on a couple of trades, and if we have time to come back, then I do want to come back. So I've got actually a couple more trades, but I want to have a little bit of a review here, okay? That's one of the helpful things in our classes is when we're in the middle of the trade, let's talk about it. Because a lot of times that's when questions come up, right? When you're trading. Okay, so what we've got in here, we've got Etsy that we're up $38 on, and we've got STX that we're up $158 on. Those were 2 short verticals we put in last week. Okay, let's go see what the chart looks like. Let's look at STX first, and then we'll come over here to Etsy. So on our Seagate, it had pulled back to the 10-day moving average, bouncing off of it. Now, it hasn't gone really sky high on this, has it? But our short strike price here was 140. So I've got it penciled in here, right? So we can see as long as it stays 140, we're in good shape. And so far it has. So what are we going to do? We're going to let it work. We're going to let time decay do its thing. And if it floats along here sideways or floats up, great. It can even float back a little bit here, right? It can float back a little bit here. It may even cross below 140. If it did, we wouldn't necessarily panic, okay? But we're going to let it work. Our other trade here is Etsy baby. We're only up $10 on this. Okay, again, we did this last week. We got in here that looked like there was some continuation off this big green candle, and there kind of was, but it pulled back here a little bit. The price of where the stock is now is probably pretty close to where we got in. Okay, so yeah, we're only up $10 on it, but the 55 strike is down here. We've got $8 of leeway, right? No, we don't. We have $3 of leeway, 58 down to 55. Okay, we've got $3 of leeway. It can wander around, do whatever. Now, Etsy here has earnings on the 30th. Could we be out by the 30th? Yeah, we could easily be out by the 30th. Who was that mentioned that? Chris said, STX is next week. Let's look at STX. Let's see what date that's going to be. That's going to be the 29th of July. So really, maybe about a week and a half, we can be in this trade before earnings. And I think that's great, Chris, that you say, would we want to stay in over earnings or not? Some people will, some people might not. We'll take a look at it next week. We'll take a look at it before earnings comes around. With any luck, we'll already be out of the trade. It won't even matter. Now, one that we did last week, and I've got to go over to the monitor tab. It was Nike. Actually, let's just look at the chart first here on Nike. And on Nike, we put in a target if we captured the bunch of premium that we wanted to get out. Okay. And we put in an exit. If it went against us 100%, we put it automated that it said, get us out if it goes that low. So what happened? We got in here, pulled back a little bit, pulled back a little bit of here, and it took us out of the trade. So the dollars on it, yeah, it was going 100% against us. But let's look at which strike prices those were. Let's go to our account statement. Here's our Nike. And it was, initially we were short 72.50. I just want to examine, where is 72.50? It's about right, pretty close to where my mouse is here, okay? So it's been under our short strike price for almost the whole time in the trade, okay? That might not have meant a reason to get out from a technical basis. It still could very well have worked out, but it did hit our exit for the value amount. And that's not something we do a lot of in that class, saying, hey, if it goes against me 100%, let's get out and put that in there automated. But I wanted to show you that in this circumstance, that's what happened. So it took us out and we're just moving on. Okay, so we did take a little bit of a loss in that trade. All right. Well, you guys, we are out of time. I'll just show you a couple of other charts that come from our watch list. And if you can put together some paper trades that you want to experiment with, obviously you could do that. Broadcom has just been rolling. We've used this stock in several different classes for different purposes. But this thing, look at that. It's just like humming along the 10-day moving average like it's its best friend, right? Just kick it along there. And it looks like maybe it's just giving a nice little bit bigger nudge off of that 10-period moving average. And this is a stock that's up 14% in the last month. So it's moving along pretty decent. So some people might like that hold there. The ADX is at 33. So we know this trend is strong. RSI is high, or bullish, I should say, and moving up. And then the other one maybe take a look at if you have an opportunity is Airbnb. We've used it before, same sort of thing. It's come down to its moving averages here. It's just kind of bobbing along. Looks like RSI's hit it up. The trend is weaker on this. If you use this ADX and you're like, it has to be 25 or forget it, then you might not be interested in that particular chart. And the last one here is going to be Cisco. Okay, it's on our list here. It's up a little bit here today. Looks to me like it, made this high 2 weeks ago, pulled back to, say, the 30-day moving average, looking like it's bouncing up here nicely. Could be a bounce off that 30 support. It could be a close above the high of the low day. We're not at the close yet, but some traders might say, hey, it's moved above the high of the low candle, which was yesterday. All right, you guys, I hope you're starting to follow this process. I hope you're starting to be comfortable with it. So when I say, what's the next step? You know what the next step is. You know how to calculate the return. You know why it has an entry signal and so forth. Okay, so continue to practice that. And I would hope if this is a strategy you want to be one of your bread and butter strategies, like so many do, be doing like 5 paper trades a week on it. You're like, oh, 5? Yeah. If you want it to be, a big one in your portfolio and you want to get good at it, You know, it doesn't matter how many trades you put in your paper money portfolio. Maybe you can only handle 2 or 3 in your live account, but if you want to put 5 in your paper, that's fine, right? You can put as many in there as you want. Very good. Well, you guys, my time is up. Mike Fairborn's up next at the top of the hour with Think Scripts. And he'd love to see you there. So take a break. We'll see you right back at the top of the hour. James, thank you so much for helping in our chat. Doesn't look like we had a survey here today, so you're off the hook for that. But if it was helpful, go hit the like button on the way out. Again, be a subscriber and follow James and I on X. Would love to see you there. Okay, you guys have a good rest of your day. Bye-bye.